Good morning. Welcome to IG's early morning call. It's Wednesday, the 6th of March. Let's take a look at the headlines as you wait the start of today's European session, looking for a slightly stronger start across the European markets in the trading day today, despite the fact we saw US indices down yesterday, led by tech stocks, Apple dropping on poor iPhone sales in China. Let's take a look at as well as what's happening on the economy. Overnight, we've seen a slowing down in GDP in Australia as the risk is shifting from inflation to concerns about growth, and this could well mean the next move in interest rates in Australia will be on the way down. And also continuing to watch what's happening with the dollar. It's not much move today, but we're awaiting some important economic data out on US jobs, and also Jerome Powell's testimony to Congress, the first of 2 days in which he's going to go into a Q&A with the legislatures in the States. Take a look at volatility. We are holding on to the gains that we saw yesterday in the markets. Now, this rise in volatility yesterday, in my mind, was really all about US tech stocks, which I'll take a look at in just a moment's time. It's nothing to do with what happened necessarily in Europe. You can see this long-legged doji candle yesterday, indicating that there was some uncertainty about the future direction of the move. Because we saw a long underside wick yesterday, I'm wondering if this is actually going to be something which could well see the next few days of gains in the London markets. We're awaiting the statement from the Treasury today. Chancellor Exchequer stands up in the House of Commons, delivering the UK budget, which might be a defining moment in the direction of trade over the next few days. 76.53, looking for a stronger start in the London markets. And the moves as well on the European markets, same sort of price action, gains at the moment on both the German and the French markets as well. So looking for a slightly stronger start across the European session in today's trade. Overnight, we've seen a continuation of the rally in the Japanese equity markets on the 24-hour session. In fact, on the trading day today, you can see we ended down just by a very small fraction in what was otherwise a market where we've seen some gains across the markets on the Japanese trading day today. But the Hang Seng Stock Index up 1.5%, S&P ASX also gaining on the session in today's trade. Let me take a look as well at what's happening on Wall Street, because it was tech stocks on the way down that took the markets on the way lower yesterday, with losses across the board. The Nasdaq down 1.65%. I think in amongst the movers, I want to show you this chart first of all. This is the Apple trading day of the last few days. Yesterday shedding a further 3% in the session after the market learned that iPhone sales in China fell 24% year on year in the first 6 weeks of 2024. Its Chinese competitor Huawei saw unit sales rise by 64% in the period, according to the same report. It wasn't just Apple on the way down that took tech stocks lower in yesterday's session. This is an interesting chart. We're very close to levels on Tesla that we've not seen in 10 months. We get a break of this 17,500 level. Second day in a row of losses yesterday. Production halted at its German gigafactory. Production's not expected to resume before next week after a suspected arson attack severed both power lines feeding the plant. There's been a lot of concern within the German economy about what's happening with Tesla and Tesla's expectations that the German economy should bow to what Tesla is doing. And as I said, a suspected arson attack yesterday taking power out, and that saw Tesla shares down. Break of that take us down there to levels not seen since the 17th of May 2023, if we get a break of that 175 level. Now, let's take a look as well at what's been happening. I promise you what's going on the US market. So I want to take a quick look at what's happening in tech stocks, because the US Tech 100 way down over the last couple of days, away from the record highs that we saw at the beginning of the week, 17,948. This is the candle we got at the moment. Not much move on from the close that we saw in yesterday's session. S&P 500, same sort of price action, holding where we closed at yesterday's 24-hour markets. Now let's take a look at what's been happening in terms of some of the economic data out overnight in Australia. The latest growth data show the balance of risks in the Australian economy has moved from risks about upside inflation to concerns about the outlook for growth, and reinforces bets that the RBA's next move could be a rate cut. It expanded 0.2% in the fourth quarter, missing forecast of 0.3% rise. That compared with an upwardly revised 0.3% expansion in the prior quarter. Now, annual growth slowed to 1.5%, down from the 2.1% the previous quarter, and that's the lowest growth we've seen since 2021. These high borrowing costs have done a great job in curbing demand across the Australian economy. In the fourth quarter, household spending did not add to economic growth at all. Spending on essentials rose by 0.7%, was offset by 0.9% fall in discretionary spending. Now, interestingly enough, we've not seen much move on the foreign exchange markets, but if you look at what's happening with the Aussie has been one of the areas where we've seen most movement. It's not been much, but most movement. This is one of the charts I've just picked out, which is the Aussie rising against the Kiwi, and we've seen the highest print intraday there we've seen since the 16th of February. But if you look at some of the other crosses for the Aussie, yes, it's moved, but to be frank with you, it's not really moved it out of any major area. We're currently trading at 65.2 cents against the US dollar. This is the Aussie rising against the US dollar. So expectations are for interest rates, market pricing in the first rate cut from the RBA, possibly to come in August. Since the numbers out from Germany, German trade data out that we've seen in the last half hour, surplus widening to 27.5 billion euros, helped by a rise in exports of 6.3% month on month for the month of January. So it's a bit of backward-looking data that we've seen there. Before we take a look at what's happening with the euro dollar, I want to move on what's happening with sterling. There's more important data out today, I think, for euro dollar, so I'll wait on that. I want to show you this chart, which is sterling against the US dollar. We'll be monitoring what's happening there because it's spring budget day today. The Chancellor of the Exchequer, Jeremy Hunt, expected to give a £10 billion personal tax break in the form of a 2p cut in national insurance payments to everybody and scrap the so-called non-dom status, giving overseas people a little bit of a tax break. That had been the case, and it had been the case since the colonial era of the UK. So it's expected to be scrapped. And could this see further upside for sterling? We're just breaking this line I've got on here, which is at 127.06, which has been sort of a line of interest. But I think really the area to watch out for is 127.34, which is the highs we saw yesterday. We're going to break at that. Next big line to watch out for is 128.28, which were the highs we saw back on the 28th of December. So that would take us up to 1-year high if we saw further upside for sterling in the wake of that spring budget out at 12:30 p.m. today after the Prime Minister's question times. Meanwhile, UK global construction PMI data out at 9:30 this morning, seen rising to 49 for February from 48.8 in the prior month. This is still the slowest contraction in UK construction since August last year, but it also means that the sector would remain contracting in the 6th straight month. And we'll continue to wonder what's happening with sterling in the wake of that as well. Dollar could be tested later on today. The first of the release of two lots of jobs data out. We've got the ADP employment change and JOLTS job openings today, and then another set of data out on Friday for non-farm payrolls. This data is really the curtain raiser, if you like, for non-farm payrolls. So we're looking for 150,000 ADP and 8.9 million job openings. The 200,000 is meant to be the number to watch out for what's going on for non-farm payrolls out on Friday. So let's get on to euro-dollar trade. There's not much move in the dollar as a dollar basket trade, but the euro is peaking up once again. If we close at these, it'll be the highest close we've seen for the euro-dollar trade since the 2nd of February. The euro has been appreciating as many see that data coming through in the US is showing that the Fed has been given more room to cut interest rates this year, with the first cut expected still in June. And we're currently trading 108.64. Where do we go from here? Well, if you're long on this, your stop goes underneath the 200-period moving average, just below the 108 level. 108.65 is where we are. 109 to break, and then it goes up to 110, which would take us to levels not seen since the 2nd of January, if we see a continuation of that move that we've got there. Meanwhile, I want to quickly reference the Canadian dollar as well. The Bank of Canada comes out with an interest rate decision today. Monetary policy voting members expected to reference patience in a worsening outlook for the Canadian economy, with many saying weakening economic conditions are setting the stage for rate cuts in the coming months. This is a repeat of what we've seen in Australia today, and it's widely expected we'll see it across a number of economies as we see interest rates remain at highs. Until they start cutting rates, the big focus is now going to be on what's happening with the growth aspect of what's going on in the economy. I want to show you what's happening with the Canadian dollar, because this is going to be the area to watch out for today. This is the US dollar trading against the Canadian dollar, US rise against that weaker Canadian dollar. The Bank of Canada will have the opportunity to weigh on the latest gross domestic product figures and how those affect the path for interest rates as well. So we'll have to see what happens in the Canadian economy but the interest rate decision out today could well be key for the Canadian currency. Let's take a look at some of the stocks to watch in today's session. Let's bring up a chart of Legal & General. Legal & General is out with numbers this morning. A little bit of a disappointment, I think. Reported an operating profit of £1.67 billion for 2023, below expectations in what the insurer called a challenging economic environment. Operating profit was forecast at 1.75 billion. So you can see at 1.67 billion, it was below. Now, we've seen Legal & General rise from recent lows we had back on the 13th of February. And I'm wondering whether this is a possible shorting opportunity. I say possible. It's not a trading recommendation. It just comes through as an opportunity, I think, here to potentially trade this on the way down. The company still says it's on course to achieve its 5-year targets. The stock will open at 245. If you're short on this, your stop loss goes above sort of 248 level with a view potentially to take it down at the start of today's session. Another stock in view today will be Tullow Oil. This is a favorite amongst IG clients. It's posting a net loss of $110 million for 2023, according to the figures out this morning. Revenue coming in lower than this time last year at $1.63 billion. Pre-tax profit dropping to $96 million compared to $442 million this time last year. To say, Tullow Oil is quite often seen as an interesting stock to watch. A couple of things worth mentioning here. Yesterday, we saw the peak on the downside at the lowest level that we have seen in this stock since the lows we had back in July last year. But this is a bullish wedge that's beginning to develop. When you get these lower lows, you get these lower highs. Quite often, this is resolved on the upside. You get a break on the upside rather than the downside. You measure the height of the wedge pattern and you give yourself a projection. That would take it up to around about the 319 level if we got a break on the upside. But we'll have to see how things develop for that stock. Let's just take a look as well at another stock worth watching today. Big gains that we've seen for Galliford Try recently, but look at this in the context of the longer term picture. This is a civil engineering company. We've come up with a half-year report today. I like the look and shape of this. We're opening at 243 pence per share. The company says it has excellent visibility over future revenue. The strategy and outlook remains positive. The company says that we've seen a 21% increase in revenue to 890 million in the first half, a 2.5% rise in operating margins, 33% increase in profit before tax, and a 33% increase as well in interim dividend as well to 4 pence, up from 3 pence a share. So I think whichever way you cut this, looking positive at the start today. If you're long on this at 243, stock goes below the 240 level. The recent highs we've seen at 261, which highs we saw back on the 23rd of January. But as I said, in the context of everything else, look at where we've been for Galliford Try, those record highs in the stock at £18.28 back in September 2015. Now, let's move on to a couple of other areas, one other area of the market, commodities, but a couple of other areas I wanted to follow up on. Just wanted to show you this chart here, which is the chart of Brent. We are up today, but after 2 days of losses. So oil price is holding on pretty much to where we are in the last few weeks or so. This is the US crude picture that we've got. Yesterday evening, the API data had an impact on prices. Crude oil rose by around 423,000 barrels last week. Economists were expecting a 2.6 million barrel increase. So that's where we are in terms of inventories. I want to return to the charts, just take a look at what's happening with spot gold. On those records that we saw yesterday broken, this red line remains at the highs we saw back on the 4th of December. So you can see a break at the 21.21 level. 21.31 is where we're standing at the moment, top of the candle at the moment. No sellers in today's trade for the price of gold. Bitcoin, the record high that we saw, when was that, yesterday, intraday, at just below the 70,000 level. That yet hasn't been broken. 661.31 is what we're trading at the moment for the price of Bitcoin. That's it. We're back at 10:30 with Charting the Market. I'll be speaking with Serge Berger at 10:30 this morning from the trader, the steadytrader.com. And he'll be with me talking about some of those commodities. We're looking at gold, we're looking at silver as well at 10:30 this morning. Thank you for joining me for that, with his view on the technicals around those markets. And watching out for Legal & General and Tullow Oil at the start of today's trade, along with a potentially positive outlook, possibly from Galliford Try, on from its positive first review of its numbers out this morning.